Opendoor stock had an interesting Wednesday session, one that once again highlighted just how emotionally charged this trade has become. The stock opened relatively flat but quickly lost momentum, dropping as much as 10% during the session, before staging a strong late-day rally to close down by only 14 cents, or roughly 2%, at $6.82 per share. For most traders, a day like that might feel like whiplash, but for long-term investors, what happened today tells a much more interesting story. The fact that the stock rebounded so sharply from the lows shows that there are still buyers stepping in when the price drops below that $6.50 to $7 range. And that might not just be retail support either, because there was a major development today that deserves attention. Alfred, a well-known investor and early backer of several successful fintech and crypto companies, announced on X that he has taken an initial position in Opendoor, 210,000 shares, purchased at $6.44. He wrote that he believes the company has a massive opportunity to reshape the U.S. real estate and mortgage market. He also said he's a fan of the new CEO and board members and that he stands behind Eric Jackson and the so-called Open Army. He finished that post with 3 simple letters, LFG. Now, that kind of post doesn't just happen randomly. Alfred has built a reputation for spotting asymmetrical opportunities in misunderstood sectors. When he takes a position publicly, it's usually because he's done his homework and sees something the market is missing. In this case, he's not betting on a quick trade, he's betting on the transformation of how Americans buy and sell homes, and on Opendoor's ability to lead that change through technology and scale. The timing of his entry is also fascinating. Remember, Opendoor has been trading sideways for weeks, largely hovering between $6 and $8 per share, consolidating after its strong run earlier in the quarter. It's been a quiet stretch in terms of company news, but a lot is happening beneath the surface. We're less than 24 hours away from the next major housing data release, which could shed light on whether the stabilization seen in the August numbers is continuing into September. That report will be followed by the Federal Reserve's rate decision on the 29th, and then by Opendoor's own open house earnings event on November 6th. So we have 3 known catalysts lined up: data, rates, and earnings. The next 2 weeks are essentially the bridge that will define how this stock closes out the month and possibly the year. Against that backdrop, Alfred stepping in today is an encouraging sign. It suggests that smart money is looking beyond the short-term noise and focusing on the medium-term setup. What's also worth noting is that the broader market didn't have a particularly eventful day. Indices were flat to slightly down. So Opendoor's sharp intraday volatility wasn't driven by macro factors, it was internal positioning. Traders were probably trimming ahead of the data, locking in short-term profits, and clearing out some of the leveraged positions that had built up in the $7 range. But once that flush occurred, the buyers appeared, and that's when you saw the strong rebound into the close. And this isn't the first time we've seen this pattern. If you look back over the past few weeks, Opendoor has repeatedly shown strength after deep intraday dips. That's the hallmark of a stock that's quietly being accumulated. It doesn't mean it can't go lower in the short term, but it does suggest there's real conviction building at these levels. We also can't ignore the psychology at play here. For many investors, this has been a frustrating period. There's been very little fresh news from the company, at least on the surface. Kaz Nejatian has been relatively quiet on X this week, aside from light-hearted posts about being added to PagerDuty alerts, a humorous sign that he's in the trenches with his engineers. But if you've followed Opendoor long enough, you know that periods of silence often precede meaningful updates. The company's new leadership team has been laser-focused on operational efficiency, product innovation, and preparing for that upcoming earnings call. Kaz has already said that he wants it to feel like an open house, not just another earnings call, but a genuine conversation with shareholders about the company's direction. That kind of framing tells us he intends to speak directly to investors, not just through spreadsheets, but through vision. That's why days like today are so important to keep in perspective. They test conviction. When a stock drops by double digits intraday and then fights back, it shakes out the weak hands but often strengthens the base of true believers. And now, that base includes one more high-profile investor with deep ties to both tech and finance. Looking ahead to tomorrow, the focus will squarely be on housing data. Analysts are expecting a mild softening compared to August, but the consensus remains that the overall housing environment is holding up better than many feared earlier in the year. Remember, the Fed already made one rate cut, and if the upcoming data shows resilience, it will reinforce the idea that the housing market has stabilized, and that's directly bullish for a company like Opendoor. The company's model thrives on transaction volume and consumer confidence. Even modest improvements in affordability or buyer activity can lead to significant swings in revenue. But here's where it gets interesting. The market often prices in fear before data drops. So if tomorrow's housing numbers come in as expected, or even slightly better, we could see a relief rally. And Opendoor, having already dipped below 7 and found support, could easily be among the beneficiaries. That's the setup going into Thursday, a stock that's been beaten down, an investor base that's hungry for validation, and a known data event that could serve as the spark. In the bigger picture, nothing about today's session changes the long-term thesis. Opendoor continues to position itself as the leader in AI-driven real estate transactions. Its ongoing experiments with AI customer support tools like Ernie and Chloe are aimed at scaling engagement far beyond what human agents can handle. The company's aggressive cost-cutting under Kaz Nejatian has also been a quiet but critical storyline, with millions being saved by reducing SaaS redundancies and optimizing operations. These aren't flashy announcements, but they matter tremendously for long-term margins. Add to that the growing alignment between leadership and investors. People like Eric Jackson have been vocal in their support. His Drake campaign is now more than 60 days in, and it's not just about hype. It's about signaling persistence and belief through consistent communication. Every day he posts keeps the narrative alive. And when you have a CEO who listens, a founder who still supports the company, and a growing list of outside investors buying in, you have a setup that's very different from a typical beaten-down stock. You have an ecosystem of conviction. So what should investors be watching for now? First, keep an eye on volume tomorrow. If the stock holds above 6.5 despite any early volatility around the data, that's a bullish tell. Second, look for any commentary from Kaz Nejatian or other Opendoor insiders in the next few days. With housing data out, they may start building anticipation for the open house event. And third, remember that market psychology often flips quickly. Just as pessimism can snowball on the way down, optimism can return in a heartbeat once the narrative turns. In a sense, today might mark a subtle turning point. Not because of the percentage move, but because of who stepped in. Mike Alfred's public entry adds credibility. It puts Opendoor on the radar of a broader investing audience that might not have looked at it before. And that's how momentum often starts, quietly, at inflection points that only become obvious later. So yes, today the stock closed lower. Yes, the $7 floor cracked temporarily. But beneath the surface, there are signs of accumulation, renewed confidence, and an upcoming series of catalysts that could shift the tone dramatically. For those willing to take the long view, days like this are not reasons to panic, they're reminders that volatility is often the price of opportunity. As we head into Thursday's session, the stage is set. A high-conviction buyer has entered. The housing data is coming. And the next few sessions will likely determine whether Opendoor's story enters its next phase as a company, not just defending its price floor, but building a foundation for a larger comeback. Stay tuned, because the real test of conviction begins now.